welcome to the Money Show, your one-stop destination for all your personal finance queries. I'm Kavita Thaplial, and today we have a power-packed show for you, where we'll be talking about having a Trump portfolio. Now, what that actually means is what kind of changes or reshuffling or revamping is done looking at the new US president that we have. We'll be having a panel of experts who will be guiding you on this today, and later on in the show, we'll be also throw upon the counter to get your mutual fund portfolio queries answered by our experts. Just in case you are watching the show live and need any assistance, any help from our panel of experts today, you can WhatsApp us your queries on our WhatsApp number, which is 865-797-4571. You can also email us your queries on the moneyshow@etnow.tv. That's the email ID, and we will. That's what you need to note down before sending across your questions. So, how will Donald Trump be your investment portfolio? Or how will Trump portfolio be for you? Across asset classes, what should be your strategy, and what should you be exiting or entering in the portfolio? And this we are talking about in terms of equity, debt, cryptocurrency, commodities. Across asset classes, what should be your strategy? That's the question and concern today. And today I have with me a very special panel. Anthony Heredia, Managing Director, CEO, Mahendra Manulife Investment Management. We have Mahendra, Jajoo, CIO, Fixed Income, Mirae Asset Management. I also have with me Sumit Gupta, CEO, co-founder, CoinDCX, and Gautam Kalia, Senior Vice President and Head Super Investor at Sharekhan by BNP Paribas. Hi, good evening, and welcome all of you to this very special edition of the Money Show. You are going to help our viewers make a Trump portfolio. Let me begin with you, Anthony. First of all, how do you see this mandate, and from an investor's point of view, and from a fund house point of view, what are you betting on going ahead, Anthony?
So, Kavita, I think the first thing I would say is that, reacting quickly in the short term is never investment portfolios. So I don't think we are going to make too many changes off the bat. Let me just quickly talk about two aspects. One is our expectations of how we see US markets, and then probably about how Indian markets, which is more relevant for our investors. I think in a US market context, I think it will be a tale of slightly different situations. On equity, I think there's clear bullishness that comes through with a Trump win, because there will be an expectation of policies and reforms, etc., that will be positive for corporate America and therefore earnings. And I would believe that more money will go into US equities, and that will fuel some sense of a risk on rally, which I think has already started last night. I think bond markets, frankly, predicted a Trump win in the US probably earlier than equity markets did, which is why US 10-year yields actually moved up 50, 60 basis points since the middle of September. And with bond markets, I think the expectation may be slightly different, because the Trump policy would be expected to be inflationary in the medium term, probably increase deficits, etc. So you could have a slightly volatile situation, although Mahendra is the expert, so I'll leave him to comment on that. On Indian markets, I don't think there are any clear, obvious winners or losers from a sector perspective, because positives that you see on one hand are outweighed by negatives. But let me just call out a couple. I think technology and healthcare are possible positive sectors in terms of impact in the medium term, because of the way we expect policies to emerge there, as well as spending by corporate America. On the downside, I would believe that with potential tensions, tariffs between India and China, commodities, metals, and that space will be slightly challenged. So to some degree, in the medium term, we probably make those adjustments. The larger point I would make to investors, which is actually not just related to Trump, but I think I would make the point related to the movement of the markets in October and continuing through in early November. I think we are being told that expectations need to be kept in check by the markets in the way they've moved. And we are being told that diversifying between asset classes is the way to go, rather than being too bullish or bearish on one particular aspect. So I would believe that if there is one lesson I've learned from the October market movements, as well as what we've seen with the Trump win, as well as markets today, two or three things. One, diversify. And therefore, like I said, flexi cap and multi cap equity funds, I think, are the best option in that space. More importantly, I think fixed income will become relevant. There will be clearly rate cuts that will come through with the Fed at some point. It will eventually reflect in our markets as well. And therefore, I think investors need to take a much more optimistic look at hybrid and multi-asset funds than they've ever done in the past. I think that's probably my advice at this juncture.
All right. So, it's diversification, diversification, and diversification. But quickly, Anthony, just summing up what you said. So, if we had to talk about maybe Modi trade in 2019, if you bought defense and railways, that would have been, that turned out to be the best Modi trade. Talking about Trump trade, you're betting on technology and healthcare. Can that be called as Trump trade going ahead now for you, Anthony?
I would say yes, but I would also on the items to watch. I think one element that we've not had to encounter for a while is currency. I think the strength of the US dollar for some period of time and then potential weakness is something that will impact certain sectors very differently than it has for the last couple of years. So I don't think there's a particular fund idea or a sector idea that I could call out immediately as a Trump trade, except to the point that I think fixed income is a much stronger play, and which is why I would believe a hybrid fund. If I was to be pushed into calling a Trump trade idea, I would say a typical aggressive hybrid fund is a Trump trade in my book.
So that's a clear word coming in from Anthony Heredia. Hybrid is the Trump trade category that investors can focus on. But then coming to you, Mr. Jajoo, so what's going to be the Fed policy like this time? How much of an impact Trump win would be seeing, and a stronger game ahead for the debt market? And also, we can't forget gold. Will we be seeing it retreating now?
Yeah, so I think as far as the Trump victory is concerned, I don't think that it changes anything for the Fed immediately, because whatever Fed has been doing is based on the data that has been coming on the economic front, and whatever promises or statements Mr. Trump has made during his election campaign, most of them had a rider. They say, for example, in one of the speeches, he said that there will be a 20% across the board tariff hike or tariff for the Mexican imports, provided Mexico does not act in a certain way. So there are a lot of negotiations that will happen. Whatever Mr. Trump has said, it's not as if tomorrow morning or in the first week of January, all of that will be implemented. There will be protracted negotiations, and therefore, I think that for now, the Fed has to focus on the economic landscape where we have a steady economy, we have the inflation which is stable and kind of trending down, and unemployment rate is inching up slightly. Now, coming back to the focus on the Trump trade, which is extremely positive for India and from a Fed's perspective also, is something not so much on the tariff hikes and the other angles, but what Mr. Trump has been emphasizing in every single of his speech is that he will stop the war. So today, the biggest challenge that any central bank is facing, and including our Reserve Bank, is the geopolitical uncertainty. So let's say in the 3 months that we have over the next quarter, if the Russia-Ukraine situation stabilizes, if the Israel-Hamas situation stabilizes, if the threat of a nuclear conflict triggered by, say, Iran or one of these countries is reduced, then I think suddenly we are looking at a very stable commodity, complex. We are looking at a much reduced tariff related disruption, but also much reduced navigation related disruption, right? So therefore, I think the Trump administration is significantly positively disposed towards the central banks moving towards cutting rates simply because it is expected to take away the geopolitical uncertainty. So I believe that Fed is going to go towards 3% eventually, and the 25 basis points rate cut today will be just one small step in that direction. So by all means, we are expecting a 25 basis points rate cut by Fed today. And I just want to stop by saying that, reproducing what one of the analysts said, and I read his report, that the threshold for the Fed to not cut today is so difficult that by not cutting today, they will possibly disrupt markets in a manner which then will become a challenge for them only to manage. So I think by all means we should see a 25 basis points rate cut today.
All right, so that's the word coming in from Mahendra Jajoo as far as your fixed income portfolio is concerned. Let's talk about cryptocurrency. And Sumit, a very favorite question that also doing rounds is $1 lakh for Bitcoin. By when? Early 2025. Can we say that?
Uh, Kavita ji don't want to give a price prediction, but definitely from my vantage point, it looks a very bullish setup, and I expect a price rally coming in. I think folks don't realize this, but this is the first time we have pro crypto, and not just pro cryptos, very strongly supportive of crypto and Bitcoin as the president of United States, which is one of the largest market when it comes to overall crypto and Bitcoin. I think not just Trump, but also the vice president, which is JD Vance. He personally holds a lot of Bitcoin. He has also been very vocal about support for Bitcoin, support for crypto industry in US. I think all of these are very, very positive signs. And with that coming in, with ETFs getting launched in the US, and yesterday I was reading billions of dollars were traded in just first 20 minutes. We have also seen when the election results were getting announced, the price of Bitcoin going from $69,000 to $75,000 in a matter of few hours is just a clear indication that both are tightly linked. And given all these positive movements, and we have not seen any this is just the start. I think the kind of promises that were made as part of the campaigns, and the stance that Trump has, which goes to the extent that they want to make America the crypto capital of the world. They want to bring back the companies where companies have been going away from US to different countries to set up their businesses. I think we are going to see a big change. I believe that this is going to be a big, a moment in terms of global crypto policy, as well as the adoption of institutions when it comes to investing in Bitcoin, and which definitely will spark a price rally. I do believe that we will see $100,000 mark pretty soon, possibly in the next couple of months, and that the markets are all signaling in that direction. I personally feel the same. I've spoken to a lot of people in the US post elections. Everyone feels very positive, and also feels that we'll see lot more momentum in the coming months. And the regulatory friction that has been there in US with the current government, all of that will also go away, which are all very strong and positive signs for Bitcoin price.
So, Sumit, should we expect any regulatory change in the environment in India, because we can't be staying back now?
Yeah, absolutely. It's unfortunate, but I personally feel that it should happen. It should happen. We should see some positive shift in the regulatory environment. But I think US has been the center stage when it comes to companies coming and building on top of blockchain, building in DeFi, building different kind of infrastructure products. India, of course, it should happen. And yesterday I was reading a tweet from one senator, where they are also talking about making Bitcoin a strategic reserve asset. When that happens, then definitely it is going to be very, very expensive for India. Imagine right now India can buy Bitcoin at $70,000, $100,000. But imagine if those things happen, and we are not talking about a small amount, we are talking about billions or hundreds of billions. When that happens, then essentially India will have to pay a higher price to get the same asset. I think it is urgent and important for India to consider some sort of a regulatory framework where people who understand the technology, people who believe in the technology, people who believe in Bitcoin should be given a chance to be able to legitimately buy and hold it so that they are not they're not paying 5x the price that we have today. And it's inevitable that there is a lot of institutional money is coming in and will continue to come. We already see a lot of governments also holding. Bhutan holds Bitcoin in their treasury. I expect a lot of, again, these are not like just in few months, but I think over next 1 or 2 years, we'll see with US taking such a stance, we'll see a lot of governments also holding Bitcoin. And US has already announced it. Yesterday, there was one announcement, and all of these developments indicate to me that India needs to act fast on this. And hopefully with this change, obviously governments follow what other governments are doing. So hopefully this should bring in some positive regulatory framework for this industry in India as well, else we'll leave behind.
Right, right. Gautam, now what's a new kind of financial portfolio? What according to you would be a Trump portfolio? Would you give place or any kind of exposure to digital assets also now?
Yeah, so it's been answered, but digital assets, I'm not sure yet as to the products that are available and their legality. So that still remains a question. Though yes, with Trump coming in, we do expect crypto to go up. When it comes to the overall portfolio, already mentioned that it's already mentioned on the show that we have to follow a multi-asset approach. Home country bias is something that people should by now at least understand is not going to really help their portfolios. You can't have 100% of your investments only in India-centric asset classes. The US market has delivered fantastic returns, and we can clearly see over the last, at least from yesterday, that the market loves Trump. Corporate taxes are expected to be cut, which basically means again positive news for US equities. So you need to have exposure outside India in your portfolio, whether it is Trump, whether it is the the money that we see moving to China. Definitely we need more exposure to global equity. Then when it comes to debt, it's clear that rates, the dollar, if you look at the dollar index, the currency market is signaling to us that rates will probably stay up, dollar rates, which means that rupee rates will probably have to stay up to keep in tow. So you are looking at adding duration, adding debt to your portfolios as well. So overall you have to have a multi-asset approach. Now gold also, if you see, the last 2 years have been fantastic. The expected rate, and we are still bullish as a as a brokerage house. We are still bullish on gold for the next 2 years. So again, gold also plays a role. So really, besides Indian equity, you need to have Indian debt, global equity, as well as some precious metal in your portfolio, and that multi-asset approach has to be followed, especially now. And going forward, we expect the domestic stock market to be more, a stock pickers market. There'll be individual stories that we'll have to track. While one can always talk about IT and other sectors, but that is also going to play out.
Yeah. That individual strategies, I think, is something that we will have to wait for. But it's time up for this particular discussion. Thank you so much, Anthony, Mahendra, Jajoo, and Sumit for being on the show and helping our viewers in formatting or revamping their Trump portfolio. Thank you so much. We'll take a quick break, and post that we are joined by Gautam Kalia. He's staying on with us to answer your mutual fund portfolio queries live. Just in case you want to ask any question, the WhatsApp number and email ID are flashing on your screen to send across your questions.